Hey guys, John from Gutenberg Research here, and in this video I'm going to take you through our iRobot earnings model ahead of this week's release. And I will be using the guidance in the third quarter press release. So if you go to the Investor Relations homepage, you can see they have details right here. And they also have some detailed guidance at the bottom too, where they go through the adjusted EBITDA analysis. So that's pretty important right here. So they give full year and fourth quarter results. One important thing to note here is this will be the first full year 2017 view on earnings that's going to be released on this earnings call. So it's going to definitely be an important one to watch. And they'll also be giving the final verdict on whether or not they earned that 15 million earnout for the defense and security divestiture. So that was going to be based on full year 2016 revenue guidance or actual revenue earned. So we'll get the final verdict of whether or not they earned that. And then we'll get an update on how things are going in Asia because they had the recent release of Brava Jet, which has done incredibly well in that market. And the strategy is probably progressing as they announce the acquisition of the distribution business in Japan. So this will probably be a pretty exciting earnings call to watch. And we'll get into our consensus-based view, which is available on our webpage, gutenbergresearch.com. Click on the Models tab and scroll down to the iRobot model. And you can see we have our consensus-based view at the top, and this model was actually built by one of our virtual financial modeling interns from Boston College, Timothy O. So thanks, Timothy, for this model. He also has his own personal view here, and I've posted my view of the company with my version of the model as well. So we're going to look at the consensus-based version in this video, which you can download by clicking this icon. And this is the one that we've calibrated to meet management's guidance. So that's why I want to take you through this one. And that way you can change the assumptions and run some scenario analysis on your own. So this model works similar to the rest of our models. The cells are color coded, so if you see a blue cell, those represent our primary estimates, and those are the cells that you would want to change if you're running sensitivity analysis. The purple cells indicate that that particular metric is calibrated to meet management's guidance. Orange cells represent consensus estimates, and then the columns are also color-coded, so the dark gray columns represent the historic actual results from the past, and the light gray columns represent the forecast future periods. At the top, we have the income statement, which is fed through assumptions in the segment details section down below. And the kind of earnings engine of this model is really the average selling price of a unit shipped and the total number of units shipped. So if you take those two, multiply them together, and consider the small other consumer revenue, you get to total revenue. And that drives the top line of the income statement. And then we have some assumptions for OPEX and gross margin, and that basically fills out the rest of the income statement. So let's go through and take a look at the guidance that management gave. We'll go back to the press release. And you can see they give the highlight of the revenue, net income, EPS, and adjusted EBITDA here, but you really have to go down to the bottom for the details. But let me just show you how I've actually incorporated these into the comments so we don't have to toggle back and forth between this view and the other. So for revenue, they expect to be between 202 and 207 million for the fourth quarter. So let's go back to the model, scroll back up to the revenue line, and you can see that we've inserted a comment here which gives that guidance. So for each one of these comments that you see here, that's reflected in the press release. So now to get back to this this revenue guidance of between 202 and 207 million, you can see that we have estimated total number of units shipped for the fourth quarter of 865,000 at $225 per unit. So this is reflecting a slight decline in the average selling price per unit, and that's really reflecting the fact that we are expecting to have a greater amount of sales coming from Japan and of that Brava series, which has a lower ASP compared to the Roomba series. But then we have the average selling price increasing in the future periods slightly, and the total number of units sold throughout 2017 also increasing. And using these assumptions, we get back to the consensus estimate for revenue for the next 12 months. Now after that, we have some estimates of OPEX. So management did say that OPEX to revenue would be about 40%, or roughly 40% for the full year 2016. We have it a little bit below that at 39%, and that's really to get back to our total adjusted EBITDA estimate. So if we scroll down here, we're just going to go line by line. So for stock-based compensation, which goes into the adjusted EBITDA, management expects it to be between 3.6 and 3.8 million for the fourth quarter. And you can see we're at the midpoint of that range at 3.7. For depreciation and amortization, management expects depreciation to be between 2.3 and 2.4 million, and amortization to be just below $1 million. So we're right at that estimate at 3.2. Interest income is expected to be, interest expense is expected to be 200,000. So we set that to 200,000. And then there's the remaining other items. So this is for mergers, divestitures, litigation, and other items. So we've set that at basically the midpoint of the guidance that management gave there. So 600,000. And using our revenue estimates and our gross margin and operating margin estimates, we get back to an adjusted EBITDA of just below 24 million, which is within management's guided range of 22 to 26 million. I believe that's the primary guidance there. So they also guided tax expense between 4.7 and 5.8 million. Of course, that's going to depend on where your total pre-tax income falls. So we're right in the middle of that guidance at just over 5 million. And that brings our net income to within the guidance of 10 to 13 million at 11.3. In our resulting EPS estimate, based on some basic assumptions about share fluctuations, we get to 41 cents a share, which again is within the midpoint of management's guidance from 35 to 44 cents. And you can see we've also calibrated this to meet the consensus estimates for the next 12 months for EPS. One thing to consider here is there's not a whole lot of, not many analysts are actually covering iRobot, only about 8, and not all of them give quarterly estimates. So there's a little bit of variability right now in the second and third quarter of 2017. I think that'll get cleared up, and we'll probably see some more submission of estimates after management gives the full year 2017 guidance. I think analysts are really just trying to wrap their heads around what the company's OPEX should look like going forward, being just home only and not defensive business. But also there's some structural changes going on with the company as they shift a little bit more to international markets. So definitely exciting quarter to watch. Check back after the release. We probably won't post a video, but we will post comments on our YouTube channel and on StockTwits. So good luck with iRobot and good luck with the rest of earnings.